It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Tuesday evening, March the 15th, 2016. We have another exciting newsletter in store for you guys tonight, covering crude, S&P, gold, and euro. Got a great plan in store for you guys tomorrow. Crude is bearish with another spike in channel today. That's 2 in a row. This tells us to look for selling opportunities up at the correction zone overhead, but we just saw the API news come out and it just tested this area. So this is really put up or shut up time for the sellers. They've got to show they want to defend this price, or price is going to shoot back towards today's highs and possibly all the way back up to Monday's highs. We'll take a look at that in just a moment. The E-mini S&P is bullish with a rising wedge this evening, which tells us the most reliable buying opportunities on the E-mini will be after a correction back to support levels below. Might get that sooner rather than later, the way it's setting up right now. We'll take a look at that in a moment. Gold is trading sideways with a bearish bias this evening, and a recent seller failure tells us the buyers are likely going to send this price higher on the yellow metal in the short term. Sellers, although on the gold, will be waiting to fade this move back down again. And of course, we have that FOMC announcement tomorrow that may get things shaking up here, right, for all of these markets. Wrapping up tonight on the euro. The euro's range bound this evening, and it appears the sellers are struggling to complete their rotation back to the lows, which opens the door wide open for the buyers tomorrow on the 6E, the currency futures. Got a great plan in store for you guys tomorrow, some great charts to look at. Before we jump into today's charts, though, I do want to remind you the only place to watch the full-length version of our nightly newsletter is on our trading blog here at Sideways Markets. If you're watching the video on our YouTube channel right now, not to worry, there's a link in the description of the YouTube video that'll take you over here to Sideways Markets. That way you can watch the full-length version of that video. While you're here, make sure you grab a free pass to come out and join me in our live trade room as a guest for a day or maybe a few days. In the lower left-hand corner, don't forget to register as a member of our newsletter mailing list. No spam here, of course. Just every evening, I'll send you an email when that nightly newsletter is ready to be viewed. All you need is your name and your email address in the lower left-hand corner. Right below the video tonight, nice and easy to download all the charts that you see me using in tonight's video. Very easy to get those on your own computer for tomorrow. And then I'll encourage you to learn more about what it means to be a member of our trade room here at School of Trade, and of course our beginner, intermediate, and advanced lifetime memberships. You can take a free trial of that on the right-hand side and learn more about what it means to be a student here at School of Trade. And as always, we always have someone standing by 24/7, 365 to give you guys a hand. Any questions about brokers, data, strategies, free trials, memberships, whatever the case may be, right, grab your live support on the right-hand side. Getting ready here. Another busy newsletter here for us tonight. Got a lot to talk about tonight, but we're going to start out by talking about tomorrow's news. Wednesday, March the 16th. We've been talking about this the last couple of days here, starting out last week, and of course tomorrow is the FOMC announcement. Starting out from top to bottom here tomorrow morning, we have 8:30 news, of course, for Wednesday morning. We have 9:15 news, 10:30, and 2 o'clock, right, news tomorrow. Really, for the most part, tomorrow is going to be dominated by the FOMC meeting announcement that will be coming out at 2 o'clock. First things first, talking about FOMC days. 8 times a year, the Federal Open Market Committee is going to meet up. It's a 2-day event. It started yesterday. Tomorrow, the meeting is finished, and we'll hear the FOMC announcement. Now, nobody's really anticipating to get much out of this announcement tomorrow. The analysts will slice and dice the report afterwards for us, and we'll talk more about that in tomorrow night's newsletter. The bottom line, though, is over the past few months, there has been anticipation over the prior announcement where they raised rates. They're not expected to touch the rates this time around. So if I had to guess, this would be one of the more mild reactions to the FOMC announcement. But I do want to remind you, whenever we have a big news event like the FOMC announcement, last week we had 2 weeks ago, we had the non-farm payroll report, the first Friday of the month. You know, we have these big news events that we get a couple times, every other month or so. The non-farm payroll is going to be the first of the month every month. And of course, 8 times a year, we get the FOMC announcement. This is that big news report tomorrow, and this is where we have to be very careful. Typically, the morning of the FOMC announcement is going to be slow, and we're seeing markets tonight that are definitely setting up for a slow session tomorrow. So don't push it tomorrow. What I always tell my clients is that before the news comes out, it's going to be early in, early out tomorrow morning. So after 11 o'clock Eastern time, heck, after 10:30 Eastern time tomorrow morning, you may not see very much volume entering into the market. That's because wise traders know there's not going to be a lot of volume. It has a self-fulfilling prophecy. And then, of course, everyone's waiting for that FOMC announcement at 2 o'clock. So tomorrow morning, early in, early out, after 11 o'clock, be very, very careful. And then after the news comes out, after that FOMC news announcement comes out, typically, again, I don't expect tomorrow to be a huge fireworks display just because nobody's really anticipating any real changes to be made or announced tomorrow during the announcement. But what you do have to keep in mind, though, is there's going to be some volatility. The problem with volatility is that liquidity gets lower. Higher volatility, lower liquidity. There just simply aren't enough buyers for every seller. Now, you can practice trading news on a simulated account, but you can't simulate live buyer and seller, right? Remember, we're trading a real market in the stock market, in the futures market. Forex, of course, is a synthetic market, so it's much different. But if you're trading stocks, trading futures, we'll be trading futures tomorrow. It's very, very dangerous to trade news. The most important thing that I can warn you about tomorrow is be careful after that news announcement comes out at 2 o'clock Eastern time. For a new trader, it's going to be enticing to want to try to trade the reaction. But take it from somebody who has lost a lot more money than I've made off trying to trade news, right? You'd only get bit by that a few times. The hard part is that when you try to trade news, you can't practice it on a simulated environment. The only way to do it is on a real live money account. And I think every rookie learns that lesson. Luckily, I learned that lesson many, many years ago. Avoid trading into the news. The news is going to be a dangerous environment. I always tell my clients, don't even think about trading after FOMC announcement until you've seen at least 8 of these, right? 1 full year, because hopefully by that time you will have smartened up, right? And you won't be seeking such volatility. We don't need that excessive volatility. So early in tomorrow morning, and then be careful after that news comes out. I also want to talk about the petroleum status report tomorrow, right, at 10:30 a.m. This is also a big news report tomorrow for crude oil traders, right? The inventory report. That tells us after 10:15 tomorrow morning, we are sitting on hands. So it really is going to be an early in, early out scenario tomorrow for crude traders and everybody else. If you're trading crude, it's literally cutoff time at 10:15, and then typically we'll look for opportunities after the news, but that's going to put us in after that 10:30, 10:45, 11 o'clock. Tomorrow morning is going to be an early in, early out environment tomorrow, whether you're trading crude, right, or any other market because of that. So be careful with that, right? Get to it early, and tomorrow morning, luckily, we get some relatively big news at 8:30 and 9:15. That should get the volume going in the market. But after 10:15, we're sitting on hands on crude ahead of the inventory report. And of course, after 11 o'clock, we're sitting on hands. Remember, you can leave positions open into the afternoon on days like tomorrow, but just be careful trying to add on or trying to enter into new positions when that news has the markets whipping around left and right. Okay, now hopefully prepared for a relatively busy news day tomorrow. Let's jump into our charts here for tomorrow and take a look at this market, right? We got crude, we'll follow up with the crude, S&P, gold, and we'll wrap up with the euro. Crude oil is bearish with another spike in channel today, which tells us to look for selling opportunities up at the correction zone. But the recent API number, which comes out every Tuesday afternoon at 4:30, just tested this area. So the sellers have to show us they want to defend this price, right? Or the buyers are going to push this price most likely right back up to that 37.44. We have a spike in channel that tells us to look, we have a spike in channel, a bearish spike in channel, a trap low, and a big news event on the schedule for tomorrow. The spike in channel tells us to look for selling opportunities after the correction back to the base of the channel. But this just happened after the API report was released. So the sellers need to hold this price here, or the buyers will try to push this price back to the beginning of the spike at 37.44. The trap low is a big bullish clue, and it makes perfect sense why price went almost directly back to the spike in channel correction zone shortly afterwards. The big variable for tomorrow is the inventory report at 10:30 a.m. Eastern time, and then of course the FOMC announcement at 2 p.m. Eastern time, which tells us to get to our trading early in tomorrow's session. As you can see here this morning, We had a clear spike and channel down. It felt almost range bound if you were with us today in the trade room. It felt almost range bound, right? Kind of the way it felt. It was relatively slow 2 days in a row here. Yesterday we kind of blamed it on the time change. Today, as you can see here though, relatively, well, you can't really see it by looking at it in hindsight, but if you were trading it in real time today though, it was relatively slow. When we saw that break at the low, right, that completed the long-term spike and channel, it felt like those sellers just said, all right, pack it up and we're done, either ahead of the inventory report tomorrow or ahead of the FOMC announcement tomorrow afternoon. So that led into the trap low. So we have a spike and channel down. That spike and channel tells us really ultimately two things. First of all, it's going to want to pull back to the correction zone, which of course in this case is up at 36.77. I'm not going to go over the complete breakdown of a spike and channel in tonight's newsletter. I'm running a little bit late, but if you watch my newsletter every evening, which I encourage you to do, we frequently do a full lesson on spike and channels. So we know the spike and channel correction zone is right here, right now. Now, we did just go into this zone off news, so there might be a little bit of bullish reaction here that may blow off and then come back down. The bottom line, though, is right now is that if they could hold this area, we expect a retest of the low, 35.96, and then don't forget that will turn into a long-term measured move, A, B, C, D. So, of course, with a spike and channel, we know the most reliable selling opportunities are going to come after a test of the correction zone followed by buyer failure. Buyer failure leads into strength, strength leads into continuations, and we're looking for the price to return back to that low. The one thing we want to keep an eye on here is going to be the high of that channel, right? The high of that channel may get in our way here as support, and it may end up giving the buyers a little bit more leg up here, if you will, right, to send that price higher. Bottom line is we are right there right now, and we're looking for right now is we're looking for buyers to pull back and fail. Failure turns into strength, strength into continuation, and of course continuation right back down to that low, and then possibly here tomorrow, right, into that, right, measured move long term. The hard part right now is going to be that news that comes out tomorrow, right, at 10:30 a.m. Eastern time. Now, what if the buyers hold, right? If the buyers hold this pullback, where are they gunning for? They're going to be gunning for that 37.44. That 37.44 is the spike and channel failure point, right? We know spike and channels. We know they're going to want to correct back to the base of the channel to then head back lower. We also know if they fail, they're going to go right back relatively aggressively, right, to the beginning of that spike. I also want to mention too that we have 2 days in a row of spike and channels, which definitely tells us there are some definite targets, runaway targets you would call at this point, up at 37.86 and 38.77. You know, it's easy to kind of connect the dots right now and see how a move lower into that spike and channel, if it fails, it goes back to the beginning of the spike from today. But if this thing happens to get carried away tomorrow after inventories and the FOMC, would we really be surprised if we see these buyers take it all the way back up to the beginning of the week? It's unlikely, but I won't be surprised because, again, we have quite a bit of news, right, on the schedule for tomorrow. So definitely look for buyers to take control here if the sellers can't hold this 37.44, 37.86, and, of course, 38.77. What we'll be looking for is if the buyers hold this pullback, you know, of course, if the buyers fail to hold the pullback, that's the easy job. Now we know where this price wants to go, right? It wants to go back to its low, and it wants to make the larger measured move. If they hold that pullback down now we're going to get a chance here to find a larger channel, right? And we'll be looking for rotation inside that channel. You'll have to come out and join us in the trade room tomorrow morning to find that channel. It's going to take a little bit more information that we have right now. Like I said before, though, the rule of thumb right now on crude oil is 10:15 tomorrow morning. It's drop dead. That's our cutoff because we have inventories tomorrow morning at 10:30. And then if it wasn't for the FOMC announcement tomorrow afternoon, you could pick up after 10:30, you know, 10:40, 10:45. But I just don't think you're going to get much volume coming in at that time. So right now, the buyers have to fail here if the sellers want to have a chance to send this price back lower in the short term. If the buyers hold here, look for a test of that 37.44, right, as we go overhead. And if you're looking to buy this market right now, just watch out. You get some trend lines. And of course, resistance trend lines are easy targets.